And I think the last couple of months since Enable and we started partnering each other, we've done a lot of good work where we've gone to banks, done lots of demonstrations, POCs, and we are really sort of going through this journey of collaborating to get these digital payments, the whole ecosystem into the industry. How do you see Stanchion partnering with Enable, and also just not partnering, but how do we really contribute to the whole economy and the regulation, and how can we become an integral part of this whole journey?
So I think a key challenge that many banks have got is a lack of experience or a lack of deep skills. Stanchion's an organization that's been around for 25 years. We've done more than 30 projects around the world in this digital space. And these are markets that are just more naturally further up the adoption curve than Sri Lanka. Sri Lanka's adopting fast, and we can bring those skills into market. But it always requires a local partner that has strong knowledge of the banking and finance ecosystem, strong local partnerships. So we always work with an integration partner, and Enable is our partner here in Sri Lanka to do that. So really, we're bringing that global twinned with that local expertise. The products that we've built in our solution that we call Payment Fabric essentially allows a bank to get started without replacing what they have today. So many banks are faced with a prospect of either having to replace platforms they've got or potentially outsource. But there is another option. And the other option is to effectively wrap or overlay what they have today, protect the existing system, and then just buy business logic or product logic that enables capability. That still needs to be deeply integrated. And what our Payment Fabric does is it essentially provides an API to a lot of legacy card management systems. And it provides a common API at the front end for these incredibly busy mobile bank app development teams to consume. So what they don't want to do is constantly have to change the mobile banking app, and they don't want to do that across different products. So we provide a common card-based API at the front end, and then we take care of the complexity of working with what can sometimes be several different card management systems. We have a leading bank in Oman that's a customer, and they actually have 3 different card management systems from 3 different vendors. So the customer needs a common experience, but they've got 3 different platforms they need to manage, and they've got multiple card schemes that they're working with. And so what our Payment Fabric does is it takes care of all that complexity by acting as an overlay.
So from a layman's perspective, what it basically says is you don't have to have a state-of-the-art card platform as a bank. And the proposition or the service that you can bring into the table is that, again, in very layman's terms, the soft tokens, the digital payments, all what you talk about, it's CVV, the dynamic CVV, all these can be done without actually upgrading your core infrastructure. You have the capability to manage wrapping it around, as you well said it, and get it out in the market, which is a much quicker way. So that also, I believe, brings your proposition which must speed into the market. That's what you're saying, right?
That's correct. If you take the executive within a bank today, probably the one thing that you know that is true is that data is becoming a richer and richer source, and that you need to work out how to launch products more quickly that have a lot of data-driven insight from them. But you're in an environment where you've got a lot of legacy tech. You're not entirely sure where consumer behavior is going to go in terms of the adoption of QR codes and what that might do to traditional current account banking. You're possibly not too sure where things are going to go from a credit card and commercial card perspective. And so in that vacuum, you need to be able to protect what you have today to be able to very rapidly launch new products that you have the control over rather than the vendor have control over, because we've got AI developing at an incredible pace. We know that agentic commerce has already been successfully trialed here at the end of March by MasterCard in Sri Lanka is coming. We know that in 3 years' time, we'll probably see large corporations having budget to buy quantum computers. So there's a huge game changer in a relatively short period of time that's coming down. And within all of that, do you want to be replacing your card management system, which is so deeply embedded into your entire ecosystem? Why not extend it, give the modernization that's needed with a modern overlay to it, but keep and retain everything that you've got, and then work out how you're going to provide that hyper-personalized experience based on the data that you've got within your organization.
These amount of amendments coming into your own system, right?
Yeah, absolutely. And to try and take some friction points out of the operational inefficiency as well. So, as technology comes along, one of the things we need to be looking at is how do we make the whole process more operationally efficient for banks as well. And I think the way that you can increasingly use APIs will help a bank achieve those goals.
So when you say friction, is the PIN management process you consider as friction?
So PIN management is very often a big friction. In fact, it's quite interesting. There are many parts of the world where they decided that they wanted to be able to no longer have a customer go to a branch to pick up a new PIN, or to send it out in the post if the postal network was good. So several years ago, they allowed for SMS to be used as an OTP. Today, we're seeing almost every central bank around the world mandates in place where you cannot use SMS as an OTP delivery method anymore, because an SMS is by its very nature a store and forward process. And it's incredibly easy to essentially do a man in the middle attack, spoof it, and therefore get access to the data. So we're seeing central banks also rapidly change the way they're doing it. And so PIN management is a big friction point. Where banks get this right, they can actually start to even rationalize the branch network, because in many countries, the volume of people going into a branch to ask for a PIN reset or help with their PIN is very high. And unfortunately for a bank, that's a service concept. Your tellers are not selling loan products or insurance products, which are far higher margin than trying to do a service reset.
Thank you, Norman. Thank you so much. I believe actually we are running out of time at the moment. What can I say? Enjoy our beautiful country.
Thank you.
And I look forward to the next couple of days. We have a couple of sessions coming up with some top C-level executives. And I wish you all the very best. And let's take one step at a time.
Thank you very much. We're also very excited to be working with Enable. Our first impressions, and the relationship's only really about 7 or 8 months old right now, but we've been really struck by the professionalism that Enable brings to the way they execute their projects. So for us, it's been a very happy partner to have discovered, and we're delighted to be working with you in the local market.
Thank you, Norman.